Welcome to The Explainer. Today, we're going to dive into a pretty incredible story about a stock, Vedanta Limited, or VEDL, and how it could have generated an absolutely massive return. It's a fascinating look at a powerful but often forgotten investment strategy. And just so you know, this explainer was put together with some help from AI, but every single fact has been checked and approved by our human team to make sure it's all accurate and clear. All right, so here's the game plan. First, we'll introduce you to VED. Then we're going to dig into the charts and see what the technical signals are telling us. After that, we'll reveal the real secret ingredient behind that huge return. And finally, we'll tie it all together with the most important takeaways. So let's start with the number that got our attention, 876%. I mean, wow, that's a potential return on a single stock in just 5 years. It sounds almost too good to be true, right? Well, let's figure out how it could have happened. That's really the big question we're tackling today. And as you're about to see, the story isn't just about picking the right company. It's about using a simple but incredibly powerful investment technique that a lot of people overlook. Okay, first things first, let's get to know the company at the center of all this. Who exactly is VEDL? So, VEDL is a big player in the mining and metals world. Think zinc, copper, iron ore, the basic building blocks of the global economy. Now, what that really means is its performance is totally changed the global commodities market. This makes it a really interesting stock, but also a volatile one. It can swing up and down with the health of the economy. And these numbers really tell a story, don't they? On one hand, you've got this massive 5-year growth. We're talking over 335%. But on the other hand, just look at that huge gap between its 52-week high and low. That's a roller coaster ride for sure. Okay, so with all that volatility, how do traders even begin to figure out what's going on? Well, that's where the charts come in. Now, it's not a crystal ball, but it helps us spot patterns. So let's dive into the key technical signals for VEDL. First up, we've got moving averages. Now, don't let the name scare you. They're basically just a way to smooth out all the daily noise and see the real underlying trend. Is the stock generally going up or is it going down? And for VEDL, the signals here are pretty loud and clear. The price is trading well above its key short-term and long-term averages. And that X on the chart, that's what traders call a golden cross. It's a classic super bullish signal that suggests a strong upward trend is in full swing. Next up, the RSI, or the Relative Strength Index. You can think of this like a momentum meter. It helps you see if a stock is maybe getting a little too hot, what we call overbought, or if it's been unfairly beaten down, which we'd call oversold. VEDL's RSI is sitting around 60. Now, that's pretty strong, but it's not in that overbought danger zone above 70 just yet. For some analysts, that's a good sign. It could mean there's still some gas left in the tank before the price gets overheated. And finally, we've got the MACD. This one is all about momentum. It doesn't just tell us which way the stock is heading, but also how strong that push is. And again, it's telling a very similar story. The MACD line is above the signal line, the histogram is positive. You put it all together and it really points to one thing. Buyers seem to be in the driver's seat right now. Okay, so the charts are looking pretty good, right? Bullish signals all around. But that alone doesn't get you to an 876% return. No way. For that, you need what I like to call the secret sauce. And that's what we're about to uncover. And here's the secret. It's something called a Dividend Reinvestment Plan, or DRIP for short. The idea is actually super simple. Instead of the company sending you a check for your dividends, that cash automatically gets used to buy you more shares of the stock. It's like putting your compounding on autopilot. And for a company like VEDL, this strategy is an absolute game changer. Why? Because they're famous for paying out some seriously big dividends. Just look at these numbers over the last 5 years. Every single one of those payouts acts like fuel for the drip engine, constantly buying more shares and growing your stake. And this right here is the magic. This slide lays it all out. Without drip, you'd have a fantastic return, no doubt. 472% is nothing to sneeze at. But with drip, by just letting those dividends roll back into the stock, the return nearly doubles to a mind-blowing 876%. You end up with way more shares and a much, much bigger final value. That right there is the raw power of compounding. So we've looked at the bullish charts, we've uncovered the power of drip. What does this all mean? Let's wrap it all up and get to the key takeaways. All right, Here is the bottom line. The technicals for VDL look pretty bullish, and a drip strategy can be an incredible way to boost your long-term growth. But, and this is a big but, you have to remember what this company does. Its fortunes are completely tied to global commodity prices. It's a high-risk sector. An economic boom could be amazing for the stock, but a recession could hit it really hard. And look, we have to be super clear about this. This whole breakdown is for educational purposes only. We're not financial advisors, and this is not investment advice. You should always, always do your own homework before making any financial decisions. So that leaves us with one last question to think about. Forget VDL for a second. The real takeaway here is about compounding, and it makes you wonder, is compounding the most overlooked superpower in your investment strategy? Because as we've just seen, it can make all the difference.